administrators say mobilizing revenues from inside borders will help position countries across Africa to more easily achieve sustainable development goals and, of course, finance recurrent expenditure. Hence, the focus of this year's African Tax Administrators Forum 2017 International Conference on Tax is on building strong domestic tax regime. It is from here in Nigeria's Federal Capital Territory, Abuja, that will bring you this episode of Nigeria Going Beyond Oil. I am Christy Cole-Popola. Thank you for joining us.
The African Tax Administrators Forum deserve our commendation for this timely conference.
This conference could not have come at a better time.
I think this is something that is long overdue.
A timely intervention. This expression summarizes thoughts from leaders, policymakers, and administrators from more than 34 African countries who converged in Abuja to compare notes on strengthening internally generated revenue across Africa. This ATAF 2017 conference was themed Building Strong Domestic Tax Reforms in Africa, Strengthening Value-Added Tax, Personal Income Tax, and Company Income Tax.
The tax problems of African states have remained much the same in complexity and character since. The elephant in the room in most discussions on tax in developing countries remains the problem of domestic resource mobilization, addressing the so-called tax gap, the difference between what we collect and what we could collect.
There is a definite link between tax and prosperity. And looking back, particularly to Africa, into our history, we have always had tax systems of one sort or another. Basic, primal in some cases, but we've always had effective systems of collective mobilization of revenue. The problem with oil and other commodities is it effectively destroyed some of those systems, and we need to rebuild them in order to develop a sustainable and predictable revenue flow to drive our development.
The chairman ATAF, who is also the executive chairman of Nigeria's Federal Inland Revenue Service and chief host of this year's conference, Babatunde Fowler, says localized solutions to tax problems will emerge from the conference. Other heads of revenue boards agree that the solutions will address the gap between tax policies and administration across Africa.
But among ourselves, as people with the same vision in Africa, we're going to fight harmful tax practices. We're going to ensure that we share ideas in terms of base erosion and profit shifting.
We will share experiences of how to avoid VAT fraud, how to optimize and broaden the personal income tax net, and how to make the corporate tax experience a better one, both for the taxpayer and for the tax collector.
It is actually crucial for the African nations to come together because of three things. One, the issue of domestic resource mobilization is relevant to all of us as Africans because, to the best of my knowledge, there are very few countries in Africa that are able to finance completely their development budgets, never mind their recurrent budgets. Secondly, in the course of our work, which is through programs with different countries, we find that there's clearly a gap between policy and administration. Three, it is peer facilitation. So when one country has the capacity, say, in auditing, and the other has capacity in the taxpayer registry, they come together and help each other.
Questions and more questions were raised as the tax collectors deliberated, shared experiences, challenges, and successes from across Africa.
How do we build tax regimes or tax systems that will enable African countries to generate more in terms of getting revenue from personal income tax, VAT, company income tax, in terms of what do you need to do to ensure that taxpayers are more compliant, in terms of how do you use technology to make it easier for taxpayers to comply and make it easier for tax administration for the tax officials itself?
The Africa Agenda for 2063 requires that Africa provides its own resources for development. How will the resources be provided?
Agenda 2063 is a strategic framework for the socio-economic transformation of the continent over the next 50 years. For these leaders, charting the path to achieving these growth and sustainable development goals is deeply connected to strengthening domestic resource mobilization, especially through plugging loopholes and broadening the tax base.
The resources can only be provided through domestic resource mobilization. And in order to do that, we as Africans and our leaders need to focus on strengthening domestic resource mobilization.
These types of conferences are bringing together tax administrators as well as the taxpayers themselves, representatives of the taxpaying community, to basically appreciate what level of understanding there is about taxation. And it's also an opportunity for us as tax administrations in the African continent to basically share experiences, challenges, success stories, so that we can actually go back to our home countries and come up with African solutions to our own problems.
So when we get together as tax administrators, we try and increase the level of what we call non-resource assets taxes. In terms of, in Nigeria, for example, we're trying to build non-oil taxes. In other countries, they're focusing on regular taxation minus the tax or the revenue that comes from the sale of natural resources.
For these professionals, the conference presented an opportunity to refocus and re-examine taxpayer education and internal budget financing.
With the deep dwindling fortunes of these commodity prices in the international market, it behoves on these various countries to devise ways of strengthening their internally generated revenue in order to be able to augment for this shortfall.
And therefore, it's across Africa. It's not only peculiar to Gambia, but Africa in general. It's difficult to make people to pay taxes. And it is always the duty of the tax collectors to make sure that they do a continuous education on taxpayer education and to tell the people the reasons why they need to pay the taxes, to be self-reliant.
And Nigeria is hosting the third conference. I'm highly happy that it is happening here. There's a lot to learn from sister countries, Africa, because we have common problems when it comes to taxation.
The third ETAF International Conference on Tax in Africa is focused on a number of objectives. First, to take a team which is building strong domestic tax regimes, strengthening VAT, personal income tax, and corporate income tax administration across Africa.
Every other year, ATAF brings together tax officials from all over Africa, especially also from elsewhere, to discuss topical issues about the challenges of taxation in our continent. And this year is the third international conference on tax in Africa, which is called ICTA. And we're very grateful to FRS for hosting this wonderful event.
You're watching highlights of the African Tax Administration Forum's third annual international conference on tax. Conversations here have revolved around the ATAF's intervention in strengthening taxation systems across Africa, compliance issues, administration issues. After the break, we'll take you through some of the 14 panel sessions held across 4 days. Statistics show that African countries have indeed made remarkable progress with tax collection, but the results of this are overshadowed by slow economic growth across the continent. High-level panel discussions were held to discuss how to boost revenues despite this economic challenges. One of such panel sessions was led by Nigeria's Finance Minister, Kemi Adeosun.
This issue of lifestyle audit. That's something we've been looking at very closely in Nigeria under our VADES program, where we look at the lifestyle of certain individuals and we compare it to their tax return. And the inconsistency is so glaring, it's almost embarrassing. And we've given an opportunity under the voluntary asset and income declaration scheme for people to come clean and regularize. We've kind of accepted that as a nation we have had an issue and we're trying to correct it. But let's go to Ghana. If you do the lifestyle audits in Ghana, do you find the same inconsistencies between people's lifestyle and their tax return, or are people concealing their lifestyle? How is the experience in Ghana?
That aspect of lifestyle patterns of individuals, to me, form one of the several elements of areas that we can look at in boosting revenue to meet our needs. Indeed, in many tax legislations, I believe that of Nigeria and even Ghana has got elements that deal with powers of Commissioner Generals to raise assessments based on the best judgment of the Commissioner Generals. And indeed, the processes and procedures of most administrations have avenues for the administration to assess persons based on lifestyles when they fail to submit the requisite returns. The essential thing is that we need to put in place or improve the systems we have currently initiated to ensure that all persons who are liable to pay taxes are helped legitimately to pay the right amount of taxes at the right times, at all times.
The Vice President said it, we've got large non-formal sectors in Africa. It's common to Ghana, it's common to Zimbabwe. How do we get them into the tax net? What sort of innovations can we use? The idea of the traditional tax return may not work. I live in a village, what's a tax return? Maybe I'm not even literate. What's a tax return? How do we recreate some of our historical community systems of mobilizing revenue?
Nowadays, there are real opportunities of innovation. The communication technology has brought a lot of chances. Look at the wonders that the mobile technology is doing. I think if we can leverage on that, people, even people in the markets, paying 500 naira per day, they would not feel it. And those mechanisms are there. I've been in countries where people are just classified as being in the informal sector just because really of the inefficiency of the tax administration. I don't see how somebody who wakes up every day and works in a marketplace at a particular place every time pays the fee to the market corrector and pays for electricity at that same place. You can call those people informal. Yes, they are small taxpayers, but they are not informal. And if you cannot reach them, it's not their problem really, it's the problem of the tax administration there. So one of the reasons why people say they don't want to pay taxes is because they don't see the link between the services people are getting and the taxes that they are paying. And that should be very simple to highlight.
What are the elements that drives tax compliance? And we found a combination of looking at value for money, social services, infrastructure, roads, and so on the one hand, and there was quite a positive response to that if you look at that particular country's rapid progressive development. And probably part of it has been the central role of the state in that development and the visibility of the head of state in public life. But we found on the non-compliance side, actually it had to do with information, just not knowing where to pay tax, when to pay tax, how the tax system works, and a weak form of communication between both corporate and individual taxpayers and the tax administration.
Conversations cut across boosting revenues continent-wide, accelerating investments, improving collections, VAT, and digital economy. One of the hot topics was the ICT session, which focused on leveraging digital platforms and systems to enhance tax payments.
We need to sensitize taxpayers. We need to make it easy for taxpayers to pay their taxes. The government too need to do much to convince taxpayers that there's a need to pay tax, so that they will see what their taxes is being used for.
There was one of the sessions that talked on how to tackle VAT leakages across Africa, the leakages of VAT tax revenue to countries. And one of the things that Nigeria spoke about there was how we use ICT initiatives, using technology to reduce that interface between the VAT payer and the taxman, so that there will be less leakages, using technology to capture the VAT as it is paid by the tax VAT payer.
Well, it's exciting to note that globally, within the continent, all the tax administrators have agreed on one thing, that data is important. So it's important to be able to gather and harmonize useful data that is available to be able to know who your taxpayers are, which is the fundamentals before you start administering taxes. So I'm happy to note that majority of discussion so far is centered around how do we get good data, how do we make good use of this data, how do we build analytics to be able to monitor trends of taxpayers and to better administer taxes to taxpayers. Yeah.
Although the informal sectors are there, but even the informal sectors, I think you'll agree with me, even in Nigeria now, even the informal sector, people use mobile money now. So how tax administration will be able to get that information to ensure that they tax the right people is what is key.
Now, despite the fact that it is widely regarded as the tax of the future due to its broad base, the value-added tax is still only administered in 44 out of 54 African countries. At this conference, we have seen a rare admission by administrators and experts alike on the lapses that actually do occur. Both categories are calling for a review of the processes for proper implementation.
The VAT is an easy-to-tax area. Secondly, it helps you broaden the base in the sense that because it reveals the next person when they're coming for their input, you're able to include them in the tax register. Whereas all the other taxes are just a one-off, the VAT actually does that. Secondly, other than being easy to tax, the VAT is also a tax relief for the future because of about three things again. One, in leveraging this and in collecting VAT, you are not only looking at one taxpayer, but we are looking at a chain of everybody who has been able to do that, whether it is goods, whether it is services. So it is a chain that leads to the other, and the person who is paying it is the consumer.
Most important critical tool that will drive the realization of VAT being a reliable and most sustainable way of generating revenue to sustain our economy is that we must put in place a unique system of, first, we have the problem of identifying who are those that should actually be in the tax net.
We need to exchange ideas, exchange experience, and have a voice on the international scene so that African countries can also make their points, so that our arguments can be heard and taken into consideration.
For the tax administrators, one of the first steps to cleansing the tax system across Africa is to self-reflect and keep tabs on taxpayers through data compilation and tracking. ICT investments should also be made in manpower to address problems central to tax administration.
In a number of cases in Africa, there's a big disjoint between what taxpayers pay and how the tax gets, utilized by the government. There's an issue of transparency. Governments must be held to account in terms of what do you do with the revenue, with the tax that you mobilize from individuals.
For anybody in any situation, if you want to improve, the first thing you have to do is look yourself in the mirror and say, these are my problems. You have to be truthful. You don't need to come into a tax conference like this and say, oh, well, everything is rosy in my country, everything is nice. Because if you do that, it means that people can't help you.
It should be the same thing for our tax administration. They should be able to know not only the number of taxpayers that are contributing in their database, but also the potential taxpayers out there that can be brought to the tax system and of course continue to, through them, increasing the revenue collection.
The tax administrators insist reorientation of taxpayers must be prioritized and that there should be consequences for poor tax administration and tax avoidance.
In all the developed countries, in Europe, in America, if you don't pay tax, you go straight to jail. So in Africa, I can't really count the number of people that have been sent to jail for tax evasion or for non-payment of tax outright. Secondly, like I said before, Africa as a continent has always been used to sell natural assets, natural resources to generate revenue. Either we're selling oil, we're selling gold, we're selling diamonds, we're selling copper, one thing or the other from the ground. We're not really focusing on the productive cycle or entity within our respective countries.
The kind of challenges that you face in Ghana, for example, would be a similar challenge that is faced by a taxpayer or a tax administration in Botswana. So if you look at today's conference, this 3-day conference, it's focusing on what we can consider to be the bread and butter issues of tax administration.
Because of weak tax legislation and tax laws, African countries lose a lot of money. Some of the biggest investors on the continent are multinational enterprises. These multinational enterprises do business with their subsidiary companies. In that process, a lot of money gets lost because African countries do not have the policies or the legislation to follow the money in order to collect the taxes from profits made. Some of the laws that we need to revisit, the laws that are governing the tax administrations that we need to revisit, and also the tax incentives that are given out. Because if you look at most of the governments, the big corporations go in looking for incentives, tax incentives. And if you keep on giving incentives to big corporations, it weakens the tax, the authorities, the ability to collect what they are supposed to collect.
First thing that I would look at is really the policy decisions. One of the things that we discuss here is that the people who develop the policies, the ministries of finance, the legislature, the judiciary, the governments, the executive, need to sit down and talk to the tax administrators. Because on one hand, they're given revenue targets, but at the end of the day, you find that the targets and the means that have been put to the administrations do not tally.
This is one of the biggest conferences that I have attended in terms of African countries coming together.
Our counterpart in Africa, in Nigeria, always do everything is big. I don't even think that we ever had an ICTA conference with that many people, so we're very, very grateful. And we hope that after this we'll manage to keep all these people in the network of ATAs to continue the wonderful work.
As we rub minds, new ideas will be formed, new relationships will be formed. I'll give a typical example. Nigeria has a lot of individuals who invest in Ghana or in West Africa, but when you look at their tax records here, it doesn't show that they're paying the correct amount of taxes. Nigerians have got private jets registered in South Africa, But when you look at the tax profile, there's no reflection of such wealth. So as we meet together as a body, we exchange information, exchange ideas, and find ways to make sure that we reach our full potential in our respective countries in the area of tax.
Building strong domestic tax regimes will help build strong revenue base and, of course, even stronger economic base. You will agree that Africa could leverage on this. Yes, I got that from the just concluded tax conference. You have just watched highlights from the 3rd International Conference on Tax held in Nigeria's Federal Capital Territory, Abuja, by the African Tax Administrators Forum. On this episode of Nigeria Going Beyond Oil, thank you for joining us. I am Christy Cole. Bye for now.